Did you know that if you bought gold the year the first iPhone came out, that same bar of gold would now cost more than a brand new Tesla? It sounds crazy, but let's break it down. Back in 2007, gold was just $660 an ounce. You could get a wedding ring without needing a 6-month payment plan. It was a different world. Now, picture this. A quiet math teacher, let's call him Dave, saw the writing on the wall. He emptied his savings, walked into a local coin shop, and traded every single dollar he had for a shoebox full of shiny gold coins. His friends laughed, calling it boomer crypto. They thought he was nuts. Dave took his shoebox, stashed it under the sofa, and pretty much forgot about it for years. Life went on. Then 2022 hit, and inflation went through the roof. Everything got more expensive. But while the price of groceries was soaring, something else was too. Gold. It smashed through its old record, blew past $2,000 an ounce, and just kept climbing. So what did our math teacher do? He did the only logical thing. He bought more. He actually refinanced his house at a sweet 3% interest rate to pull out cash and grab another 20 ounces of gold at $1,627 each. His neighbors were shaking their heads, saying, "Dave, you're insane. Interest rates are going up. The market is shaky." But he just smiled and said, "I'm just trading paper for weight." He knew what he was holding. Fast forward to 2025 in our story. The Federal Reserve finally blinked, the dollar's value started to dive, and central banks around the world went on a buying spree, scooping up over 1,000 tons of gold a year. And the price? It skyrocketed. Gold rocketed past $4,000, then $5,000 an ounce. That was a 207% increase from that dip back in 2022 when everyone thought he was crazy. And that little shoebox under his sofa, it was now worth enough to pay off his entire mortgage and buy a second Tesla, this time in cash. No loan, no financing, just pure profit. In fact, that boomer crypto his friends made fun of had officially outperformed Apple stock over the same period, without a single dividend, software update, or Wi-Fi signal needed. It just sat there, getting more valuable. So this brings us to the spicy question of the day. If an AI model had quietly predicted this exact run last October, and you still haven't bought a single ounce, are you early to the party? Or are you about to become next week's exit liquidity? Let me know in the comments. Type stack if you're grabbing some of that shine this week, or type pass if you're riding the dollar all the way to zero. I'm really curious to see what you guys think. Thanks for watching, and don't forget to subscribe for more content like this.